Good morning, everyone, and welcome back to another episode of FarmCon Conversations podcast. I'm co-host Todd Leckman on the Panhandle of Nebraska with my good friend Kevin Van Trump in Kansas City. Kevin, good morning.
What's happening, buddy?
Well, we survived. I was watching the internet last night. Do you guys have severe weather, within 100 miles? So I saw some tornadoes in southwest Kansas, maybe, or southeast Kansas.
Hell, when don't we? When don't we have severe weather this time of year, right?
No.
Yeah, I know there were tornadoes again all around us, but hell, like I said, I think it's about every other day or every other few days. So
it is that time. All right, just checking in to make sure everybody's.
Yeah, we're here.
Hey, you and I spoke a little bit this weekend. I want to get out there. I know you hate talking about some of the things you buy and this and that, but I thought some of the stuff was too interesting to pass, especially all the farmer stuff we got. So share a little bit about what you got this weekend.
Oh, boy, yeah. So Michelle and I were supposed to head out of town. We were going to go down. Tulsa had that huge gun show they always have, but we were looking at some Indian stuff the guy was bringing down and some Wild West type artifact stuff. But we were going down that and a couple other auctions that were out there. And Michelle just didn't want to head out of town. The kids were gone. They were out of town, and Hillary was here with the grain. Michelle didn't want to go out of town. So I said, all right, hey, we'll stay in town, but then you got to help me with some of the stuff I'm behind on. I had a bunch of work to do, and she agreed. So we did a bunch of demolition work on one of the new buildings we had purchased, and I had managed the folks over there at Kraft's auction had dropped me a note that they had some equipment, some tractors coming up that I had been kind of in the market for, looking around. So, I went over there. We demoed all weekend. Hell, we were sledgehammering and demoing shit out for I think Friday, Saturday, and Sunday, but I managed to sneak away during there and bid a little bit on my phone on a couple of things. And yeah, probably an idiot. Probably paid the highest amount ever paid for a 40-20, but it was one that I had been looking at for a long time with the right options and the right equipment on it. As it's the 40-20, John Deere 40-20. And it was in the diesel with the power shift, both the options.
That's awesome.
I've been looking for, and like I said, I told Michelle when I got it, it was a weird way. I was planning that I would go up to about 55 or 60, and then it kept going. I kind of just kept pushing it, and I don't know, hell, so I guess we've got one coming our direction. And I did end up picking up another 25 Spoker. That they had.
Nice.
So, yeah, that was cool. I was kicking around. I had wanted. There's about 5 tractors that I had always wanted. When we were kids, and we never had had any money and that shit. And I grew up. My grandpa taught me how to drive. Probably by the time I was 6, I bet. And he had rigged some shit up in one of the trucks, and he had rigged some things up on the tractors where I could drive. And the first tractor I think he'd ever put me on that I could drive on my own independently, go to the farm, fire it up, and do whatever I wanted. By the time I was probably about 7 or 8, an old Alice Chalmers WD-45. We just had a gasoline one. I always loved the diesel ones, but I don't think there were very many made. It was we called my pops like called a pigeon toe, a tricycle front end on it. Had the pigeon-toed wheels on the front, and just little Alice Chalmers. And so I've always been looking for one. I have never found one that was in fully restored. I've done the restoring thing on cars and some other equipment and motorcycles through the years. And hell, I always I feel like it's damn near just cheaper to. Unless you're going to really do it all yourself. I'm talking everything yourself. I just feel by the time I load them, transform, move them here, move them there, get it done, get this bill, that bill, pay this tax, that tax. I almost feel you're better off to buy from someone that's already had it fully restored, and there's maybe a few minor things left. If that's what you want. If you're wanting a trailer queen / show, if you're looking for something that you're going to use out in the field, that's a whole different ballgame. But so Todd, yeah, I have a few on my bucket list. Obviously, I think probably like everyone, I saw one go off this weekend too at Polk, a harvester, international harvester, a 1468, the big V8, tractor. The 1468 and the 1568 came out. 70. I don't know, 72 probably to 76, I think, somewhere in there. I think they, bumped the 1568 came a little bit later, just after. It was kind of a bigger model than the 1468. But yeah, I love both those. I've seen a couple when I've been out speaking in some guys' barns, but they weren't wanting to get rid of any of them.
No, they weren't.
I have never. It was a great one. At least it looked online like it was a great one at Polk this weekend that went off, but I didn't even throw my hat in the ring. But Kraft had it was interesting. They had I always also wanted a Ford the Golden Jubilee. It was, I think it was made like 1 or 2 years, like in the mid 50s, and it was kind of their I think it was their 50th anniversary to their tractor, and it seemed like everybody had those small Ford garden tractors. That was kind of my Graham's garden tractor at the farm. See, and we could never afford the Golden Jubilee or anything like that, but the 8 ends or the 9 ends were basically what we run. But there was one that came up this weekend that I thought, man, it'd be a real stretch if I was going to pay, $10-12 for it. Hell, it went for $17,500. I think it got up to $17,500, and it was still a no sale, and they passed. Kraft called me up. We were talking on the phone, and they said, I said, what's that guy got to have on that? And it was really great. It was over the top the way it was all done out. And he said, minimum he's wanting 30. And I was like, holy smokes!
Wow.
Said, I can't go 30. I can't. I'm not even anywhere close to that. And the reason, I don't even know. I was probably an idiot. Like I said, I'm a dummy, I guess. Maybe when you're paying, you hate to be the guy that pays the high on anything. But the story goes back like this, Todd. My pops and I'd be on our kind of crappy tractors over there. I shouldn't say that, but it is what it was, right? And we'd be on our kind of crappy tractor, and the neighbor that butted up to us on, I think it was the northwest corner of it, our bulls and his bulls would always be getting into it. And this guy had a lot bigger operation than we did. Remember, my grandpa was also, he was an engineer at Swift Packing Company and Ford Motor as well. And so we farmed mostly and raised cattle on the side, kind of, and I was up there all the time. But my grandpa also had a full-time job, worked a lot of nights and things like that. But this old boy to the northwest, and he had a beautiful, beautiful farm and operation. And I remember he had a John Deere 4020, and my pops and I, we'd sit over there on our tractors eating lunch. I'd take a break after fixing fence or working on fence something. Well, he'd be over there on that tractor. He's just proud as could be. And we're like, I tell my pops, I said, man, maybe one day, Pop, we'll get us a tractor. He's like, yeah, maybe one day. So anyway, that day was probably last weekend. So, we'll see how it goes from there. See how it plays out for you. See how my tractor collection ends up.
No, I can't wait to see it. When are you getting it delivered? Because I'm coming to town in a couple of weeks.
I don't know.
Okay.
Money up to him, but
take my picture on it, son.
Yeah, you have to get. It probably won't be here by the time you come down. Yeah,
all right. We'll come back.
No, like I said, I got about 4 or 5 that I just really, when I was out the Stroms, I loved. They had an international harvester inside their barn that had been in their family line. I'm not. I would really, that's what I'm saying. I'd like to have a green, a little bit of red, and the orange with some Alice Chalmer, and sprinkle in a little bit of blue with that Ford Jubilee, and I probably have a nice little cross section, and that's kind of how my pops was. We were never really married to one particular color. Whatever he could find cheap and we could work on and keep running. That's pretty much what we had. So we couldn't afford the luxury of picking a whole lot there. So
if you want a little bit of orange, I got some cream and orange from 1987 on a case, 2290.
Oh yeah. Yeah, we got Matt Ferguson up. Yeah.
We got a Super 92, a Super 92 that I keep telling Heidi it's gonna be my toy project to fix one day. So anyway, it's fun. Good time.
I thought about it, and I've thought about this a long time. And I told Michelle, because when we got, I told Michelle, I said, "Gosh, damn, I went way over what I wanted to pay on that," and she just looked at me and shook her head, like heard that story many times. But I tried to back up my argument by telling her this, Todd, and this, I'm not lying now. This is probably really the truth. Every time I thought I've overpaid for something, or like I was the dummy buying the hide, everybody's like, God, I got paid way too much. And this has happened to me several times on the buildings, some farm ground, some property, some houses, where neighbors and other people are saying, he paid way too much for it. those have been the ones that I've made the most money on when I've gone to sell them. The ones where I feel like I stole it, like, man, I walk away and I tell Sean, like, man, I stole it. I mean, we just got that such a great price. Those are the ones, Todd, I typically end up being my nightmare, and I can't get rid of the damn things. And so you've heard me say it at FarmCon, and it's hard psychologically to do, but, you know, the old adage, buy high and sell higher, it has really probably been a really good lesson for me, you know, and it's helped me in a lot of ways. In stocks, you know, when I first started out and I was young, I was out there bottom fishing, trying to pick bottom, trying to find all these things that are beaten up and all crazily discounted. You know, but I should have just been buying into the strength and sticking with the trend and buy high and sell higher. You know,
well, let me ask you this, because you've been saying that for the whole time I've been here, and I've seen it play out. I mean, isn't that just really, at the end of the day, isn't that just understanding value? Forget about price, understanding value, and then, you know, knowing what upside there is to the value you choose to take.
That's my theory. I mean, that is that's my theory, and that's why I thought on the 40/20, I'm like, okay, but if it's got every option you want, it's got all these pluses going for it. And I got to believe that, you know, we're going to see more and more farms consolidate, but the ones that are around, I mean, the people that are going to want that high end of whatever it may be, they're going to pay up to get it. And I've seen that play out in everything from baseball cards. Like I told you before, I mean, it's great. What's happened in the cards is ludicrous. I mean, in my opinion, but you've got now these billionaires in there, Kevin O'Leary and all these other people. I mean, they're going to pay up and get what they want to get. And so, you know, if there's only so many, let's say 49, you know, if there's only so many Leaf, Jackie Robinson rookies at a high grade, they're going to continue to demand is going to outpace supply. That's, I guess, what it all boils down to, Todd. You got a lot more millionaires and billionaires out there chasing a lot fewer really nice, really high-end type of items. And so, you know, I don't think it's any different in tractors or Wild Western type thing. And to let you know, I've been blessed to have gotten lucky in lots of things like this throughout my life. You know, I was really early in starting to collect basketball cards when it was only baseball cards that were popular. I had a great baseball card business. I actually had a business where I went to show, did all those things when I was younger. And but myself, I should say, and my wife, we jumped into basketball cards before that became popular. We were jumping heavily into football cards before that really kind of blew up and became popular. And then, obviously, you know the story in the Pokemon cards, and we kind of jumped that. And same with some of this Western stuff, and so, you know, and I feel like same with some of the rural farm equipment and some of the other things that we like to piddle in as investments on the outside. So, well, look at what's happened. Look at what happened, and we talked about this 10, 15 years ago. Look at what happened with the Broncos, the Blazers, a lot of those 1980s, 90 pickup trucks that have gone nuts. You know, hell, you couldn't give them away there for a while. And so what I'm trying to say is, you know, I wish I'd have been smart enough to be the dummy that paid the high 10 years ago for a 40/20, right?
Yeah.
But I wasn't. And I'm telling you, I was sitting there back then 10 years ago, and you're sitting there watching them tool around to 20 grand, you know, 25 grand. You're like, no way am I going to pay that. Well, hell, here you are today. Now you're paying this price. So it's like, I think there for a period of my life, Todd, I don't know, we get too deep on it, but I think there was a period of my life probably from, I don't know, 35 to 55, probably somewhere in there, 50, right in there. I mean, I was hell-bent on, like, socking away and hoarding away a lot of cash. Like, I was just taking everything and just putting in savings, you know, and I probably made a mistake there. And looking back, I wish I would have done that a lot differently. But I just felt I wanted to be super secure. I had some problems financially earlier in my life. We had to file bankruptcy before, and we had lost the house when I was doing a lot of developing and building, and we were doing everything from high-end log homes to multifamily, single family. I'd gotten just way extended. I I had owned a few different subcontracting businesses as well at that time. So I was way too levered, way too extended, got my ass kicked. And but once that happened, I just wanted to stop. I was just scared, I guess, and just didn't want to put money really out there. And so, like I said, now I've learned some lessons over the time, and I try to teach the kids. If inflation's going to be where it is, and inflation's always going to ebb and flow, but your money in cash it's just, I don't think it's the best of places. That's what I'm saying. You could do more with it if you're a little more strategic. You don't have to put it in stocks. You don't have to put it in bonds, but maybe put it in farm equipment. Maybe you put it in farm ground. Maybe there's other types of things that you get enjoyment out of, and at the same time, you're going to see appreciation 8 to 10% a year just because the dollars that are pushing it higher.
Well, that has been one of my huge lessons as I've gotten into investing in money and wealth, trying to figure out wealth, developing wealth is the asset side of things and doing it. But I had a thought when you were talking about, you're saying, yes, obviously putting it in cash when interest or when inflation's high is not the best move. But then think about this. You did that because you were, you got over leverage stuff. So in a sense, though, you probably at the end of the day were still saving money by not spending it frivolously versus, I know what you're saying, not having it invested properly. So there's almost 3 tiers there. Straight cash, out there investing. I didn't spend it, so I still saved it for a future day. Your troops came back a little missing a shoelace or something, but you still had them. But no, I get it. But assets seem to be the thing.
I typically don't buy anything. I mean, hell, I wear, I don't spend money on clothes. I don't really spend. I mean, I got shit in there.
Cut-off T-shirts you do. You buy cut-off T-shirts,
I don't really buy new ones. I mean, hell, I got some.
No, I know.
But, I just don't. And most of the things, I would say 95% of the thing, and I'm cognizant about it, and I have been ever since, like I said, I had financial troubles when I was younger, is that I really try to only buy things that I think will appreciate as an asset. And whether that's a piece of furniture or a piece of art or a piece of tractor, a tractor or whatever it may be. I used to, when I was an idiot, this was before I went broke, I'd buy all kinds of cars. You could ask Andy and all that. I had every hot, newest friggin'
right. You had one-offs you couldn't sell, baby.
Cars. I'd drive home from the board trade and just, hell, I remember when Lincoln Navigator first came out, I bought 2 one night on the way home, bought me a black one and Michelle a white one. And I was just an idiot, just a dumbass. And, I don't do that anymore. And I haven't done that in years and years. And so, right. Going broke and my folks and nobody bailing us out, it was a good lesson. It was a great lesson. It taught me a lot, taught my family a lot. Hell, our kids were shopping at thrift stores. I'm not lying to you now. Our kids, and I tell everybody, when we first moved to Chicago, hell, we didn't have enough money to pay attention. And boy, then I started really hitting it and hit some really big licks and I guess probably got too big for my britches, got out over the tips of my skis and, thought I was probably somebody bigger, more important than I was and lost it all, went broke. And, but that taught our family and my kid and myself, really probably the most important lessons that I'd learned in life, and certainly humbled me up. Went to work for my buddy who owned a bunch of automotive repair shops. So, I went from being high big-time trader, all this jazz, and then I just took kind of a break and was working for my buddy in some auto repair shops of his out in some small rural towns and helping people fix cars and fix tires. And, I just stuck it out there and just helped him build his business for about a year and a half, 2 years. And then I got back on my feet and started back in the commodity sector. And so, but like I said, you learn a lot of valuable lessons along the way. And then I just probably, like, you and I've talked in the past, and you've had your fair share of financial ups and downs. And, it definitely influences you. And it, like I said, I didn't want to take on any more debt. I always wanted to pay cash for everything. And Michelle and I were doing that. Hell, we even got involved. I remember when we were young, that Dave Ramsey had first came out. Hell, we were shuffling money in and out of envelopes and, in his whole system. So, no, and look where, and then look where we are in today's world. But just by a series of really being disciplined, sticking to my guns on saving and Michelle and I, anytime we'd hit any big licks, or I would in the markets, or she would with real estate, we'd take that money and buy a building or buy, whatever. We started off first. We bought a small condo for $50,000, or a single unit. Once we were getting back on our feet, and then we just started to go from there. And we buy a few multi-units, and then we buy some entire buildings, and then we've rolled that up and caught the wave. Luckily, caught the wave, and I've been lucky in the markets the past 10, 15 years. Caught a ton of great moves in the market, and hell, we've shared that with all the readers. We put some good money into Facebook off the IPO, put a lot in play with Tesla, caught Bitcoin, in 2013, 14 early. Just been a lot of things that we've just tried to stay disciplined on, and nothing fancy, just a lot of blocking and tackling, Todd. So, I wish there was an easy way, or I had a magic wand to tell people, but no, it's been a grind the whole time. So tried to outwork, we tried to outwork everyone and try to invest, I guess, wisely, and really that's been it. So,
well, the one thing that's impressed me most about you, because yes, we both had got to the top of our careers. You were obviously in a different realm than I, but we both to the top of our careers, and then knocked down and going back. But when you went in and got invested in the building and stuff, the assets and stuff, and even in yesterday's report, was it? You put the picture. I mean, you're still out there doing the demo stuff, which you really don't have to do. Is that therapy, or is that trying to stay?
And it is. But I see both sides of it, because a lot of my buddies was like, "Why are you doing that shit, dude? You run a chance of hurting yourself, and you just pay someone to come do it, and blah 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 blah, and you worry more about it." But I don't know. I don't know. I just can't. I can't get my head there, Todd. Maybe it's a lot what we talked about.
Maybe
what you've seen and learned as a kid, And my dad. My grandpa, I mean, it was just a rule around how. I mean, if it's anything you can do yourself, you do it. And that's how Michelle and I have always kind of tackled it. Hell, I was on the phone with Kennedy the other day, and she called over. She was wanting to borrow my wet saw. She's like, I'm tired of waiting on these contractors to get over to do her tile work. She's like, shit, I do this myself. She's like, this can't be too difficult. And I said, no, doing tile work isn't difficult at all. So get your ass on YouTube, watch some videos. I said, come over here, get my wet saw, and go to town. So she's gonna tackle it herself. Michelle does the same. Michelle got tired. We were doing a ton of remodel buildings there for a while. And, man, we were hung up waiting on some trim carpenters. I'm knocking. These guys would bump us and bump us. Michelle finally just said, hell with it. And she went out and bought all of her own trim tools. And, she was just on YouTube every night. And next thing I know, she's trimming out, one of the bigger buildings that we had down in the River Market. She trimmed the whole son of a bitch out. So it looked good. It looked better than some of the guys I was using. They looked like they had beavers over there clawing or chewing on half my wood or something. I don't know, but yeah, she did a good job. So no, we've always been, and that's what Jordan says is the big difference. He's like, Dad, I see what's happening. He's like, well, a lot of folks are out, day drinking or doing whatever they're doing, or going to the lake or doing it. He's like, you and Mom are out working on those weekends. And I'm not saying anything about anything, but he's like, man, you're not only not spending money, but you're saving and making a lot by doing it yourself. And I said, son, you're finally a light bulb went off there, boy.
Yeah.
So, but no, that is a big deal. I remember Michelle's dad used to bitch a fit about going on any vacations, right? So did my pops, because it's like cost him double. He was missing out on overtime at work, and they had to spend the money to take us somewhere. We'd go to maybe the Arch in St. Louis, or maybe we'd get a chance to go down to Silver Dollar City. But we never traveled any further than that. I mean, it was either a 4-hour car ride, and you're lucky if you got to stay one night in a hotel, and then you're back. And that's just how it was. But they didn't like missing that overtime pay, and then also having to pay, to go on the trip. So, it kind of ingrained in me, I guess, as through the years. So, no, I'm the same way. I like to, at least as long as I can keep doing it, keep doing it. So.
No, I 100% agree.
You're doing the same out. Aren't you? I mean,
for sure.
You're fixing all the fence, working on everything, working
on.
No,
we're doing it. I tell you what's funny, Kevin, because during the winter, you don't move that much. And I was telling Heidi, I mean, it's amazing how easy I've been worn out. I'm 60 now and don't work as strong. But boy, in the last month, we've been doing stuff. It's like I told Heidi, I said, dude, I'm able to lift 50-pound bags and not breathe heavy now. So yes, if nothing else, dude, you got to stay active. And we keep talking about that flexibility thing. I mean, because I don't want to fall down and whack my head like. one of those stories.
No, I hear you, buddy. That's a dangerous thing.
Hey, before we move on, quick update, because I know you put, the Van Trump report was always about many things, and positive rural America and all that good stuff. But you raised your family, and so Henry's the next deal. Quick grandparent update. I love those pictures you had Henry drinking out of the faucet in the kitchen.
Oh yeah.
And you did some planting on that stuff. So any new news with Henry lately? Any new milestones?
No, everything's good. He's good.
Okay.
The kid's got another one coming, so we're excited. And like I said, hopefully, trying to build things and put them in place. So yeah, I guess we got lots on the corn, beans, and wheat front, don't we?
Boy, buddy, I tell you what, you were busy yesterday, but let's start with, first of all, there's nothing I don't believe you need to touch on last week's WASD report, is there?
No, pretty much a non-event.
Yeah, it was. I thought so. I just want to throw it out there. Yes, let's start, man. You made some moves yesterday, and we're going to get into the reasons why, some of the theories. I think there's lessons to be learned, but let's start with corn and what you did there. I guess I shouldn't have been surprised. You told me what your plans were for getting rid of the old crop stuff, but let's start with the old crop corn. What you did?
No, I'm sitting there. I told you this, and I know we'll get into it here in a little bit. But when the tax man cometh, April 15th, when that week gets there, it's just like Valentine's Day, right? Everybody knows Valentine's Day. Light bulb goes off in my head. You better be locking in diesel fuel, or at least taking a look at it. So, you get to that first part of February. So same type of deal when you get to spring and. Definitely when Michelle tells me, hey, this tax week and all that jazz, I've got to write checks and this and that, light bulb goes off my head. I need to start thinking about the following year's crop. So my rule of thumb for my market is I don't start marketing the following year's crop until this year's crop starts to get planted. So as we're starting to see the planters roll here for corn and beans, now for 2026 corn, everyone wants to start taking a look at 2027 now. So this was kind of our first week to take a look at those. It isn't our first week, but I'm just saying to solidly take a look. So that's what started the trigger, Todd, in my head that I got to make adjustments here. So we came out, and I did make our first cash sale for the 2027 crop, or I should say our first sale. Now what I call our sale is I just go out and make a sale against the board on Dees 2027. Dees 2027 was trading just north of 485 when I did it. And I think today, let me just see where we're at real time here. Yeah, you're still in that same range. You traded above 485 today. So, I thought, what the heck? This is I don't know if I've started at this level much the last couple of years. So I'm like, 485. Seems like a great place. Let's take a shot and get a stake in the ground. So we went ahead and, sold a little bit of the 2027 price 10%, just like I said, just above there. And then I went ahead and hedged another 10%. And I did that. All I did there was just bought the 450 puts, sold the 550 calls, about even money. You could do a slight credit price. It gives you a floor at 450, kicks you out at 550 if the market rallies. I didn't do any types of 2-for-1s or anything like that. Just kept it simple to just try and get a little bit of a floor in place. So if I got a 450 floor on 10%, I got a sale here just above 485, blended out, you're probably somewhere in right around 470, 465 area for a net floor. So, not bad. I'd like to make another sale. I think I'll be patient now with 2027 for a long time. But if that back end rallies up and we get, a nice pop north of $5 and say we get into that 520, 525 area where I can get a blended $5 floor on maybe say 30% of it, that's what I'll look to do. Because I told you, Todd, and I've said this to everyone, I was early and one of the first people to work with TradeStation and some of the other early modeling and backtesting platforms that were out there in the commodity space in the early 90s. And, I've backtested almost everything possible for program systems, marketing-wise, what you can do with this, what you do with that, and how you market, and different strategies and techniques to market our crops. And I've backtested, and I think thousands and thousands and thousands of models that I've looked at. And it really all comes down to this. If you can get that first 30 to 40% off the board at a decent gross margin and somewhat decent profitability, somewhere running at 7 to 15% gross, 18%. It becomes really difficult to screw up the entire year and just knock yourself out of the game. Because I've seen some people have some just horrendous marketing years. But what I'm telling you is it's that first 30 to 40% that you really have to focus on, hone in on, and if you can get that done and get those stakes in the ground there, it becomes really difficult to run the wheels off the wagon and just destroy the whole thing. So I understand. I really pay attention to those first few sales of each year, and I think that's important for everyone. Now, if I was to wake up here and it's April 15th, and let's say prices are at $350, I'm not pricing any, obviously. So I'm only pricing it if I feel like I have a shot at locking in a little bit of a nice, a decent profit. I'm not going to hit a huge home run here at 45, obviously, but maybe if we get that bump to 520, now I'm sitting at $5. I got the first 30% off at $5. I like where I'm at. You see what I'm saying? So, that's been a big one for us. I also went out, hedged a little bit more 2026 corn, Todd. I did that. I purchased some 460 puts, sold some $5 calls for about even money. Again, a slight credit. Maybe somewhere in a slight credit. Now that did just give me another floor at 460. It kicks me out at $5. But in total, now gives me a floor on about 50% at about 460 a bushel. Plus, we're maxing out insurance on with places, and I think you got a solid floor here, 30% of 460. Now we buy some time, and we can watch this market really maybe and see what happens if we can get a weather market, if we can get a weather scare. I feel like I'm in a great position. I like where I'm at that 460 level. Just if prices run, I can participate. If they don't, I've got a little bit. I'm not going to get completely annihilated because, like I said, we got 50% of it already done. I have 20% of last year to 2025 crop that I still need to price. I just threw some puts on. I think you can go out there and buy the Julys, buy the 450s, 460s, somewhere a little bit above a dime, 15 cents, 10, 15 cents. Gives us some downside in case this market were to fall apart going into pollination or something like that. I don't foresee that. I'm hoping. Like I said, I was short some corn, Todd, as you know, from a spec account. I took profits, banked all the profits on my short corn positions, and so didn't pick up a ton. Picked up a little bit on them, and so I think there's a chance that we could move higher, without a doubt. But I just wanted to shore some things up in case we didn't, and I think this is the time of year that I like to do that. It's right at the beginning of planting. I just want to make sure everything gets squared up. I kind of use planting, the mid-season pollination, like in July, August again to double check, really sound really focused, and then again closer to harvest and really focus in those areas, and then we get that winter run. And so, that's how I play the corn, and where we go from here. You got any questions on it or anything?
No, I just appreciate that you listen. I talk to these guys every day. I know a lot of guys just haven't got structured, with their marketing. Their plan is to have a plan, have it in place, and understand the timing thing. You've been saying it for 10 years. I did not understand it for 4 or 5 years when you were talking about it, but when you put it in simple terms of, hey man, you got a new crop coming every year. It's like being in the retail business. You gotta get rid of the old stuff and the new stuff. And I know everybody's got.
But I think a lot of problem is, and it's just me again, I used to go out all the time and listen to people talk or hear other people talk, and a lot of people are saying, well, you got to have a plan. Well, I call bullshit on that. I don't think you have to have a plan. You got to be able to execute. I've had 400 diet plans and then no work for shit, but didn't execute.
Bingo. I hear you.
I mean, everyone tells you go have a plan, go have a plan, go have a plan. Why? What's a plan? Who cares? I don't care if you have a plan. I don't even care if you have any plan. But all I'm telling you is this: you got to be able to execute. When the ducks are in the air, you got to shoot, and you got to be able to get some risk taken off. So, plan or no plan, the key is execution. And I know tons of people that spend hours upon hours and days building plans, and then they don't execute. And to me, that's the travesty. I mean, you got to execute. You got to pull the trigger, And I think it's like we talked last week on the Druckenmiller thing. What was his key to success? He said, Todd, it wasn't IQ, it wasn't this, but he's a great trigger man. I like that. I want to be known as a trigger man. I want to be known as knowing when to pull the trigger. And
bingo, when to pull the trigger. Yeah.
That's it. That's the whole key to everything right there, right? And a lot of that's, though, going to be based on your individual time preferences. You know, I mean, it's all about, you hear this your whole life, timing. You know, timing's everything. What is that? Pulling the trigger. I agree. Timing is everything, and the trigger's everything. I think way too much, and maybe we were going to talk about this later, but we talk about it now. Way too much focus is put on price in marketing rather than time.
Right.
To me, time is it's like a football game. You saw, I had a great coach one time tell me, the whole key to the game is that, and it stuck with me, and it's so good. The game is about trying to be the best you can be, right? Like, I'm just saying, trying to go out there. I remember Derek Jeter one time we were at a conference, and I heard Jeter talk because my buddies, that I had some of those businesses with at one World Series, played with Jeter. They were on the Yankees, Grimsley and a couple of the other pitchers, and they were good friends with Jeter. We were at this thing, his private deal, and Jeter was talking, and he just said his whole goal, his whole baseball career was to have one perfect inning he said, where I dug into the box the right way I wanted to, where my pre-approach was just exactly when I ran onto the field to take my position at shortstop. I wanted to jump the line, the chalk line just the right way. I wanted to field balls from the first, just pre-inning fielding the right way, and just one inning. And he said that was his whole goal, his whole career, and he's like never did it. And I think that's kind of has to be, a little bit of your mindset in this, and we start talking about the time and how, and I think it's just important. Timing it ultimately comes down to everything, and how you go about that time, and becoming good at things is going to be where we're at. So, yeah, I think too much emphasis put on price. I have everyone talking about price this, price that, and to me, it's just that time becomes so critical. And you hear it, Todd. You hear it every day.
Oh, no, definitely. Hey, as we move into soybeans, it seems like there's a lot more opportunity or uncertainty there with the meeting that may or may not happen, and with what China's doing with their pig feed and all that kind of stuff. So go into what you did with beans and kind of give us an overview of what you're seeing with demand potential.
Well, I couldn't do a lot with beans because you got the back end, so the front end's trading higher than the back end, and so you got you've got May trading 11.7. Excuse me, July's now the front end of the darn thing. So you got July trading 11.75 versus the back end down here. No 27. Today's trading 11.16. So I didn't do a lot. I got some off. I put a stake in the ground. I priced 10% between 11.20 and 11.25. It's just stake in the ground. Like I said, I've had worse starting points in my life, but I've had a lot better. I shouldn't say I've had a ton better, but I've had some better starting points as well. And I also went and put a little bit, I'm going to go back to, hang on, I'm trying to pull this up for us. I was going to say that I tried to put on a hedge on that 27 crop, but I just couldn't get it figured out because I wanted to try and stay above $11, and I tried a million different ways. Maybe talk to your local, some of your local grain elevators or the brokers are using. Maybe they'll be able to find something for you, or an interesting way to do it. That's why you saw we've only done 10% for the 2027 crop. And like I said, it isn't the greatest, but it's a starting point. And to me, again, Todd, it's all psychological, right? It's that first sale. And, you sit there and you're like, do I pull it here? Do I not? Well, then we break 20, 30 cents and you start talking to yourself. And so I just said, hey, I got to get a stake in the ground. I hope this is our worst sale of the year. I've said that several times in my life, but, I don't know. As far as 2026, we priced another 5% right there with no trading just above 11.60. So that gives us, 40% priced. I hedged another 10%. I bought some $11 puts and sold some 12.50 calls. Nothing, again, just blocking and tackling, basic stuff. trying to get a little bit of a floor in. Yeah, I'm with you on the bean market side. I'm still holding some bearish bean positions because
I hear you.
You know, the U.S. export estimate, I guess it's just a complete wild card. What's going to happen with China? I don't know. Do I think they're going to take another 4, 6, 8 million metric tons of old crop beans? No, I do not. But I don't know. President Trump's gotten China to do a lot of things in the past, and his rhetoric isn't his rhetoric. I heard him talking last night about China. He seems still optimistic. It doesn't seem like they're on bad terms. I don't know about that. It just seems hard for me to believe, when Trump's knocking out all the people Iran likes to roll with when he's going over to Venezuela, and then he's going to Iran, and he's doing the things he's doing. I can't imagine China's super chipper about it all. And that's where I'm saying I didn't think they were going to take the beans, an additional number of old crop beans before Venezuela or this Iran deal. And so it's tough for me to sit here and say, oh, yeah. Now that he's just punched a couple of your buddies right in the teeth, I suspect everything's going to be great. It's hard for me to get there. So that's what I'm trying to tell you. I think the U.S. balance sheet could get a little more burdensome nearby, just because I think there could be more acres added to the till and planted acres, a few more bean acres. They're off to a great start and looks like it's going to be a fast-paced planting. And I think that, yes, domestic demand is really strong and it's going to stay strong. And the USDA is probably still needs to do a little more work on raising the domestic crush number. But I'm just afraid they're going to have to keep chopping away on this export side of things. And net, I think the balance sheet maybe works itself a little bit higher and beans maybe bleed out a little here. Just, Todd, again, this all goes around. Are we going to get enough? So let's talk about money flow for a minute. You had let's just call it the bean market. Everything was neutral. The funds had covered some of their short position they'd had. They're sitting there. Well, then all of a sudden they went from neutral to a record long position in beans just recently. And the question becomes, what are the headlines that are going to continually bring in more and more and more and more and more bullish money flow to keep the prices moving higher and higher? Because, like I tell everyone, it's like pushing a snowball up a giant mountain. You've heard me use this analogy before. The bigger the snowball gets, the higher you're moving up the mountain because you're collecting more and more snow on the snowball, right? So the snowball's getting bigger and bigger and heavier and heavier. You need more and more people coming to help you on the mountain, pushing it higher you get. And the higher you get, the more people you need pushing the snowball, not fewer. So if a few folks get tired or they're like, hey, I'm going to have some drinks, or hey, my wife's calling, and they start to peel off, well, where's the snowball going? Back down the hill. So the whole key is you have to have continued more buy-side money flow than sell-side to move higher, right, in price. If you get more buyers than sellers, price is going up. More sellers than buyers, price is going down. And it's really that simple. So my question was, are the funds going to defend this record long position they have? Defending it just simply means this, Todd. If the snowball comes back down the mountain, meaning price, will the funds allocate more money to buying more soybean contracts on the break? And to this point, they kind of have. And they've kind of defended their position to some degree. And, yeah, go ahead.
How much is this, I think you put in there somewhere, with the crude oil prices going up, the bean oil maybe getting is holding prices up. And, and we'll get into this in the macro a little bit, but, do we really even have a clue on when these oil prices may settle back down and things get back to normal and maybe some of this demand eases off?
Well, that's what I'm worried. That's why I'm putting these. That's why I put these hedges on and made some of these sales. Yeah. Just what you're saying. So with the escalation in energy prices and the conflict in the Middle East, you have to believe some war premium was added to the price, right? That's why some of the move higher, because there is an association with corn and beans, ethanol and renewable, tied to energy. It's an alternative energy. And so you've seen the funds come over and make a play. And the funds also came over and made a play because of inflation. It was an inflation type buying. They wanted to make sure they had exposure if inflation took off. They also heard and understood that there was a fertilizer impact and that you could have a food inflation. So there's tons of reasons that the funds saw to move into the space. The question becomes, when they're holding a record level of length, are they able and can they or will they want to continue to add to that length? And what headlines do you need to have them add to that length? So if the war headlines go away, or at least we feel they've reached peak drama, look what happened with prices of wheat with the Ukraine situation, the Russia-Ukraine war. Wheat went nuts, remember, out of the gates, and then once we feel like we reached, I don't know where we reached, I don't know what that time frame was, but as the market started to feel it became callous to the drone attacks and
right.
missiles flying, it just got, like whatever, it's just same old shit, different day. Okay, once the market feels that, well, here we go. It's going to start taking some of that war premium and risk premium out of the market. Same type of deal right here for the U.S., with this Iranian situation. And now, we're heading into a weather market here for the U.S., and so you have some inflated premiums starting to be built in, maybe on some weather risk or some weather uncertainties. And that's all I said. If the war premium gets sucked out, say, in the next 30 to 45 days, and then all of a sudden the next 45 to 60 days, the weather looks like it's going to be fairly cooperative in the extended forecast, well, now you could suck out not only some war premium, but you could suck out some weather premium as well, and we start to pull back, right? If we're really true demand bulls, we'll reach a level, though, that'll suffice, and the demand will start to kick back in, and we'll pull this thing back higher. But, in the interim, I want to make sure I'm covered, and I'm adding some time to the clock. So that's where I'm making these sales and making these hedges. That's the whole reason about it.
Educate me on this, and talk to these guys so I can maybe provide. I mean, why wouldn't, with all the potential ifs on the drawdown of prices, because the headlines don't sustain themselves? I mean, why wouldn't guys like right now, the last couple of weeks, be hedging some of their production? I mean, what is the mindset of a guy who's just?
I think there's multiple things. I've heard a lot of producers through the years get fixated on price, which worries me at times. They just get super fixated on price, meaning they have a price out there. And I remember one time, I tell you who it was. I remember one time I was at the top producers conference. I was speaking for them, a top producer, and somebody came up to me, and I think beans at that point had started. The beans were down around $16, somewhere in the mid-16, and I said, I don't know, man. I think we've reached, a crescendo or a peak. And again, the snowball analogy, I thought the snowball was going to start rolling back out because I didn't know how they were going to get any more buyers to come in. Where are these people who don't know about this story already? Where are you going to get these? I mean, remember, you got, if the story's already out there, it's already sold. I mean, where are you going to get these new people to come in and just keep buying this? And the guy said to me, he's like, well, I'm holding out. I don't care. I got to have $17 to make all this work and make all this sense. And I'm not lying to you. And at that time, I mean, I don't know things. And he had bought some other business, but he was fixated that his numbers that he was running, if he could get 17, it would pay off a line, and it would do this and it would do that. But I'm telling you, I remember Andy and I walked away, and we'd heard another producer say, oh, he needed this price to make this happen or this. Andy looked at me, he's like, dude, the highs, I mean, just sell the shit out of it. The highs. And sure as hell, I mean, beans never looked back. They just proceeded to make lower lows and lower highs. And, and that's what I'm saying. Some folks, I think, get fixated on a price because you're sitting there and you're like, well, I need this to pay for this or this to pay for that. And, I don't know why a lot of times, Todd, on those early, so people don't want to make those. I understand if if you just got more money, and you know what to do with.
Well, that's true. I mean, but that's not everybody. Let me ask you this, and I know every market year is different. It needs to be. But last year one of your sentiments was if we can get an average over $11, you're going to be happy. Where you do you have any similar thoughts this year? Is that the same mindset, or does it even matter?
Well,
I'm asking a stupid question.
I'm not as bearish as I was last. You remember last year, if we could get out of this year with $11, I'd be happy as hell, and we did.
Yep.
And that was great. I think there's a solid demand story. Could we overbuild the crush side of things early? Yeah, maybe. I mean, could there be a weather hiccup? I think there's a chance you could get 12.50 in beans at some point, maybe. If. I mean, there have to be a few little weather things come about. But no, I mean, I think, like I said, you got funds that are long. They're long. You've got a demand story, I feel like, and you just really need a weather story. I think things are touch and go, obviously, with China. If the relationship with China goes south, well, shit, all bets are off. That's why I went ahead and priced some, Todd. That's why I priced 27, because I'm like, shit, we got a lot of time left between now and that 27 crop, and things could go definitely awry with China at any point in time. Not saying it looks like it is. I think we're okay with them right now. But you see how quickly things can flip-flop and turn here with both administrations. So, that's where I sit here, and I'm just trying to mitigate risk. There's a lot of guys out there, I think, trying to hit home runs and things like that. And honestly, I've never sold a majority of my crop, like, at the high or close to the high. I may have sold a few bushels here or there, something like that. But I've also never, ever sold a majority of crops anywhere close to the lows either. So it's like, but that's the program and plan I put in place in the way I like to execute. That's what I'm saying, just, somewhere in I'm going to avoid the really bad, trying to avoid the really bad down years is the big thing, and how you play your losing hand. So I have to, in these early sales, that's what I'm trying to do there is just say, hey, we hope like hell this doesn't happen, but if I want to make sure I'm in a position that it doesn't happen to me, right? So
exactly.
Yeah,
no, good stuff there. Isn't
that what you're really doing with farm ground anyway? Your true wealth, if you're growing generational wealth, your wealth is coming from the appreciation of the farm ground itself over the length of time, over a 30-year, 40-year span of whenever you're the steward of that ground and you're going to pass it on to your family or whatever it may be. But and while it's appreciating and growing generational wealth massively, you are able to clip a few coupons along the way, right? Some years you're not going to clip any. You may have a loss, but some years you're going to clip some decent coupons. And that's really the overall view from 30,000 feet, that the generational wealth is being built in the appreciation of the land, the improvement of the land, what you can do to improve, all of the parts and pieces and tools of that land, and that provides you the overall generational wealth, and you don't have to necessarily focus so heavily on just trying to hit mammoth home runs every year in the production side of it. So, at least those are my thoughts.
Yeah, very much so. Let's move on to wheat. It's deteriorating before our eyes, but go ahead and tell us. I know you made your thoughts. Tell us what
you're out there in one of the worst areas in the country.
Yes, I am.
I mean, so you can get, and that's what happens a lot of times. That's why I try to limit what I price during the growing season, because a lot of times, so 20 years ago when I was, or 30 years ago, I'd go up to the local, diner where all the good old boys have breakfast in the morning, or and you can get a lot of crazy thoughts put in your head based on your own proximity and area, which it may not have any impact at all on the overall market, right? And that's what I'm saying. You go out to breakfast with the old boys out there farming right now, shit, you're going to be bullish as hell wheat, because they're all saying it's smoked, right? I mean, it's just dry as can be out there. You've had the fires, you've had the drought, you've had the high winds. I seen the crop conditions yesterday. I think, what were you guys, 14%, rated good to excellent out there in Nebraska? In your area, shit, it's probably, 1% maybe? I don't even know.
It ain't
but
good.
You can't have much. And same way with down in Oklahoma, Colorado, Texas, just really poor conditions. but you got to be careful. That's what I'm trying to say. During the growing season, you go to your local areas and you hear some of these local self-proclaimed marketing gurus, and it'll get you all squirreled up. So I tried not to shoot as many bullets during that period of time. But yeah, for wheat, we went ahead and priced our first 10% of 2027 winter wheat. And I don't, hard red. You could price July hard red yesterday at just above $6.70 a bushel, and it's like that's a hell of a good price for a starting point. So, we laid that in, and then we also laid in some hedges. We hedged another 10%, and all I did there just bought the July 27 $6 puts, sold the 750 calls. Gives you a floor at $6, kicks you out at 750. I think we did it for just a slight credit, right around E. Maybe even made just a slight credit on a few of them. And I think this gives us a pretty solid floor on the first 20%. Like I said, are you going to get filthy rich off it? No, but I think it's a good solid floor to prevent if a disaster were to occur, and it goes a long way. And like I said, if you run all these models yourself on pricing models, you'll see if you get that first 20 to 40% off, I mean, it's really tough to pull that average down crazily far. And then we went and hedged another 10% estimated our hardwood production. We for 2026 about the $6 puts and sold the 650 calls there. Again, gives us floor at $6, kicks you out at 650, nothing fancy. But I did want to get a little bit more downside risk kind of, in place here. We've had a nice little rally, a nice run up, and I just, like I said, I worry that if some of this weather and war premium get taken out, Todd, we could drift back lower. So, yeah. Those are kind of where we're at.
No, a lot of good stuff there, man. A lot of stuff going on, but be interested to see what we got. I'm not sure yet. What Gary's saying, what we're going to have, because we know we're overly wet in some areas now, and if we keep getting some of this rain, hell, we could run into some planting delays. I'm not trying to paint a negative picture, but certainly remember, it ain't going to be about drought anymore in those areas like we thought about 6 months ago, or 4 months ago.
I think you're still going to be dry to the west, in the west and the southwest, but those
right, but
notoriously dry, plus a lot of irrigation. Huh? Yeah.
Yeah. Well, we had an email from one of our buddies out traveling the country yesterday. That how dry it is, and that made me go look back. He was in Carolinas. It made me go back and review, because I honestly get stuck now looking down the set. But boy, it is. I mean, outside of some of the main corn growing areas, it caught some rain. I mean, it's just brutal, buddy. I mean, for a lot of things, but maybe not corn bean, some of those areas. But we will keep updated on it. Well, let's move along to a global stage and talk about a few things here. I'm just going to throw out the general category of what's going on with the Strait of Hormuz. I saw some great memes the other day. A guy with a gun to his head, some cartoon characters like, "You close the strait, I'm going to close the strait." And what's going on with the strait? What is Trump's global agenda? Again, let's address that. And what are we trying to do? I mean, Iran's running out of money, running out of storage space is what I'm seeing. And just put this into one big context for what it means possibly for oil prices going forward for the foreseeable future.
No, I'm not. At the moment, I think, I'm assuming they've got a plan. They're working the plan.
So.
Well, I mean, I think, maybe they've had to pivot or change a few things here and there, but no, I don't really have any comments on it. Not being able to see all the cards and all the pieces. I'm just not one to get tripped up in a lot of that. You know me. Are you
surprised in the chain? Let me put it this way: are you surprised in the chain in the course of action of the last month as things have kind of evolved? Is there anything that just really caught you off guard or made you? Yeah, okay. Well, we're just gonna.
No, I think it's great that they're blocking it. I mean, I don't know about great, but I think what the hell is whether there's other choices. So I think, hey, this is a little bit of a move. I mean, hell, if they're gonna charge tolls and they're gonna try and delegate who can come in, we just set up a toll booth in front of them, and to some degree, and we'll tell you who can come in and who cannot come in and how it'll play out. So I don't know.
I know. And listen, I'm learning, because you are such an investor trader mindset, that a lot of this macro stuff isn't something you need to spend time on because you got to do other things. But I guess on this particular issue, it's like, well, man, if they're using the naval brigade now, why weren't they doing that earlier? What's the timing? I mean, I don't know. I just found that to be a little bit.
We're out here trying to forecast and talk about
exactly.
We don't even have a fraction of. No. We're not seeing it cards. I mean, we got like nothing, and half the news is fake news, and the other news is all, politically slanted, either side you want to listen to. So it's like there's really no clean news, and so it's like I'm not going to get myself tripped up in forecasting how this plays out or how it doesn't. And that's my whole theory on shoot when the ducks are in the air. So when you go hunting, you don't ask God, you don't turn to me and say, hey, Kev, why do you think those ducks are flying west today instead of east? Or why do you think the ducks are in this formation? I don't know. Just shoot the ducks. We're out here duck hunting, okay? I don't know. Just shoot the ducks. So that I just think back to my grandma, me asking some of those crazy questions all the time. And it's like, it's the same way with our marketing, though, of our corn, beans, and wheat. You don't necessarily have to know why all these things are happening or what it's doing or how that's playing. I mean, here's the profitability that's been put in your lap, basically, and take it. I mean, take it. So
right.
It is what it is. No, Todd, I don't know how it's going to play out in the Middle East. Like I said, I'm more of a trader, and traders, we just, we wait for the wrestling. People wait for the wrestler to make his mistake, right? I say that all the time. You be patient. You wait for the market to make a mistake, and then you try to capitalize on that mistake. Do I think the market's made any mistake currently? I don't see any mistake necessarily in the crude oil sector. I don't see many mistakes right now in the stock market. I don't have a lot of positions on right now because I don't feel like things are that over or underbalanced, in any one way or another. I could argue that the bean market may have gotten a little overstretched to the upside, but I could also be proven completely wrong in that thought. The only reason I'm saying that is because I think the funds got aggressive. They got maybe a little too aggressive. I'm not sure some of the things are going to come to fruition in a timely manner that allow the beans to continue higher. That's all. Could I be proven wrong? Easily. I've been proven wrong a million times. So, that's just my thoughts. I don't see, I thought maybe silver got way overstretched there at that period where, I was selling, but I don't know. I mean, it's looking like it's hanging in there right now, trying to hold its own. I was on a call the other day, and I think it was with Andy told me about it and a couple other traders, and I thought it was interesting in the silver market that, when Trump put a lot of pressure on the Central America and Mexico and some of these places on the drug cartels and was in blowing up a lot of those drug cartels and everything, that there was some talk, or at least rumors, that some of those cartels had shifted their attention to some of those silver mines, and they had taken some people hostage and were controlling a few silver mines because, that it's pretty much untrackable or traceable as you're taking, raw silver out of the mines and things of that nature. So I did think it was interesting, some of the rhetoric that's being spread and around on some of these metals. I haven't added to anything in the last couple of weeks. I did on the bigger break a couple, 2-3 weeks ago. I bought a little gold and silver on that break. So I'm just kind of sitting here right now. I mean, rate cuts. Do you want to talk about rates too? I mean, I think there could still be a rate cut coming in 2026. I don't necessarily. I am no way sitting here thinking we're going to see a hike in 2026. But again, I could be wrong. I mean, if a missile goes sideways in the Middle East and the whole friggin' all hell breaks loose, complete hell breaks loose. I guess, and you got energy prices. You tell me crude's going to be north of $150 for an extended period of time. Well, hell yeah, we're probably got problems. But I don't think President Trump's going to allow it to happen. I think he understands the importance of cheap energy prices. I think he will try to get crude oil back down to, in the 60s. I would suspect somewhere in that area, 60s, 70s, and I don't know how long it takes, but I don't think he would allow crude to stay at 150 for an extended period.
So let me ask you, then, you taught me, you've thrown this at me a million times. So they drop interest rates, taking it back to investing. So what does that potentially mean for us as investors or traders?
Well, they drop interest rates. Here we go, right? I mean, market typically is going to move. You know, I mean, is that already baked in? I think it's probably baked in. I mean, I think most are not. I think most of the smart, I shouldn't say that, most of the bullish players on Wall Street are, I think, still thinking we're going to see, you know, 1 or 2 rate cuts in 26. I'm probably more in the 1 cut, but, you know, I think that's probably prudent or where we're headed, and I think that provides a tailwind for the market. I mean, you know, you got a lot of money being borrowed now. You got a lot of money being put in play to retool infrastructure, retool for AI, retool for a lot of this technological gain. And, you know, cheaper rates help that across the board. Rising tide lifts all ships, so to speak. So, you know, I think that
is the dollar going to stay? I mean, I know it's down a little bit.
Hopefully the dollar weakens is what I'm hoping.
Right.
Yeah. You know, the dollar,
obviously,
we were on a downhill runner for the dollar for quite a while. The output break in the Middle East, and with stocks elevated where they were at, gold elevated where it was at, silver well, you know, you had more money flipping back into the dollar for some safety. And so now that we feel like those tensions may, or at least we're having some talks and conversations about some type of ceasefire or peace agreement, you're seeing some money push back out of the dollar a little bit. So, you know, weaker dollars typically better for commodities.
Yeah. I'm just trying to, being new to this game, you know, figuring out where I stepped into the game and stuff. I mean, where is we come back? Well, no, let me ask you this on the broader scope of things, because I saw a tweet this morning that who talked about, you know, we've already had like an 18% pullback in this and that. It's kind of, we're not necessarily at the bottom. There might be other pullbacks, but the major move.
What are you talking about again?
I'm talking about the overall market, the pullback. So yeah, did I do one of my shifting?
Stock market.
And I guess I would ask you, would you be in agreement that we're pretty much that the major moves down are gone? I'm sure there might be a few more little moves and stuff, but we pretty much handled not going deeper. I mean, I want to say 18% declines.
Deep bottom recovery. I mean, this thing went down. We got the S&P down to 6,400, and you bounce right back. You're within 1%. You're less than 1% from making all-time highs. I mean,
we're gonna stay on that trajectory. Outside of the black,
I don't know if we stay in that trajectory. Do I think we go back up and test the high? Yeah, probably. I mean, the highs.
Yeah.
In the June was at 70.97. We're about at 7,000 right now. I mean, we're touching close to 7,000. And like I said, yeah, it's been a straight V bottom recovery off of it. So.
Yeah. All right.
It's definitely a resilient market. It's a crazy resilient market. And like I said, I don't. You know, there's a lot of money that wants to jump this thing and buy it. So. Yeah.
I want to see if you had any extra thoughts on the story we ran about that urgent meeting. It was called by Secretary Babasent and Powell, and see if that had any.
Yeah, Treasury Department and the Fed got together to talk about Anthropic. You're talking about with their new AI model. You know, I guess it makes sense to me. I think it's interesting that basically, if all finance, in essence, this is what I'm taking away from some of the reading between the lines, is if all of your top banks or all of your top institutions start to, I guess, adopt and implement the same type of AI models, won't all of them start to have and conclude the same conclusions? And then that's what I've always said to you, Todd. It's like, if there were a holy grail trading system created and everyone started using it, well, then the market would be broken. Because everyone would be buying at the same time. Everyone would be selling at the same time. I mean, the market would be broke. It wouldn't work. So I think there's some discussions being had around that. You know, how are these big banks and big trading firms using AI? How are they implementing it? Are they all getting on the same side of the bandwagon, so to speak? You know, everybody leaning over the same side of the boat. And if everybody's leaning over the same side of the boat, we tend to tip over. So, you know, I suspect they were having conversations, wanting to learn more, try and figure all that out, just to try and maybe be ahead of it in case there isn't any crazy dilemma or something. I don't know. Again, it's just pure speculation, but I'm sure there's more of those conversations coming out or being had as this AI advances and develops, and how it could impact the overall market.
But see, and I want to get into this with you another time, because I always have this, whether what aspect of life, sports, trading, the art versus science deal. And
but let me ask you a question. Do you use AI for investing right now? I know you do. You put shit in there all
for sure. I mean, I get research. Yes.
Yeah. But I always say this to everyone. I mean, if that's your edge, there's no edge at all. I mean, math isn't an edge. I
get that.
Math isn't an edge. Everybody can do math. And computers do math at the absolute highest level. So that's where I say, I mean, if you're thinking you're out there using AI as your edge for investing, stop. Just stop. You don't have an edge. I mean, that's not an edge. All the pros are using it. I mean, everybody can have access to all that same thing. That's not really fair.
I'm gonna say this as an average investor. I 100% agree with what you're saying, and yes, I know that. I don't know that people like me are going into it thinking they're getting an edge as much as they're thinking they're putting thoughts together they couldn't normally do on their own, and getting some insight they normally wouldn't have to make decisions they're going to make, not thinking they got an edge as much as just make some sound decisions on investment, ride the coattails of the momentum trades, shit like that, stuff like that. That's all. Because even at the end of the day, when I was 100% in my mind after, technical analysis, mindset, and stage analysis and that kind of stuff, the more I thought about it, because you're like, dude, if it was that way, everybody do it. If everybody read or watched Barry Bonds' video, they don't. But I disagree to a certain extent, because the execution aspect is part of the art point. I mean, not everybody's going to execute the same with the same information. I mean, we know that. So to me, you can be successful if, just like you said, you got friends that sell off the combine every year, and you have friends that sell 3 years out. They navigate their own boat. So I do believe you can take some maybe of the science side of things, and then your execution becomes the art of it, and be successful. But you better know what you're doing and be consistent would be the only thing I'd say. So there, you can knock me down. Come back at me.
Yeah, sure. I mean, whatever.
Okay. I know what you're gonna say. Show me.
I agree with that.
Show me.
You're saying in one breath. I just said the whole key to this thing is being a great trigger man. And it's like, if you're relying on AI to tell you when to pull the trigger, well, I don't agree that you're a great trigger man. You're allowing on other outside influences to really direct that move. So that's all I'm saying. It's
I hear you.
Artistic difference of opinion, but I think there's a lot more to intuition, a lot more to the gut, a lot more to...
No doubt. Well, in years of doing it. When you first told me back in the day, when you had that guy come in to interview, I'm just going to describe him as, the nature, tree-hugging hippie type. He's talking about, getting on the canoe, kayak in the river is how he trades, whatever. And he was like one of your best guys, if I recall.
Yeah. No, I mean, he was a guide on the river, and he down the Colorado River, and he was a whitewater rafting guy, and he wanted to be on the floor in the pit. And a lot of time, most of the time, your prop traders and your proprietary traders, they don't want to be on the floor in the pit because it's too chaotic, and they don't, you might not be able to think just clearly, or you just don't want to deal with all that distraction. But he wanted to be in the pit, and he wanted to be in the craziest pit, and he said because he wanted to feel like he was in the river, like he was in the rapids. And if he's like, if I can get right down in the middle of that and just feel the energy and feel the movement of it, then I think I can make some things happen. Guy never had a losing year. I mean, I think 3 or 4 years in a row he printed money pretty much, and then just checked the badge in and headed out and went back into the woods. And so, but there are a few of those at times that would come around that didn't really have a, some guys would come in with an MIT plan, like 18 editions of an encyclopedia, that they had this elaborate plan. Other guys came in there with something written on a napkin, and they were just more of a field type of person. And I think both can work. Like I said, I'm not arguing that they can. Yeah.
A couple quick more investing ones. You put in there today that you struggled with, or yesterday's report that you struggled with. You're never disciplined enough to do the sell in May and go away and stuff. I mean, you're one of the more disciplined guys I know. So tell me a little bit more about that.
That's what I'm saying. So the next thing coming up is we're going to have the market up here at all-time highs again. You see that? It's coming. Yeah. And we're going to approach May, and you're going to hear it on every headline. The old trader adage, sell in May and go away. And that basically means just sell in May, go away till October. A lot of guys used to just you buy their favorites in October, stocks, so to speak, and hold them through Q4 earnings and Q1 earnings, and because you had the holiday earnings report come out Q1, so they typically sell at the beginning of May, and so and then do that cycle all over again. Like I said, when I was younger, there's no way. I mean, with my ADD and all kinds of other things, that I couldn't stay focused. I that's the biggest problem I've had with all my investing through the years. I've gotten out of stuff way too early. As Jesse Livermore said, all my money was made in sitting. The greatest traders, all their money is made in sitting and doing nothing. Look at Warren Buffett. Just unbelievable how long he can sit in a position like, his position with Coke. Look at that position in Coke he's built through all these years. And that's what I said about the millionaires or billionaires that were made with NVIDIA or, say, the Bitcoins and things. It was those people's ability to sit through all that volatility and extreme that has allowed them to create those huge, huge returns. And I'm just telling you, I've never been able to do that. I owned 30,000 shares of Amazon at one point off the IPO, and hell, I was shook out of that. I think I was maybe only in it a few months, if that. And I always look back on that trade. It was an error that one of my buddies said it was an error trade that I ended up having to hold, but I blew out of it. Like I said, it would have been worth. I think, Sean, I'd figured out before it'd been worth something like $1 billion or something. But there are so many trades I have been in through the years and just didn't stay patient with them, or investments, whether it was a farm, a piece of property, this, that, or the. Hell, I'm telling you one right now I've got coming down the pipe. I sat on this one piece of property. You'll get a kick out of it. One of the properties in Kansas City here, and I had played it dead. I had heard about 6-7 years ago that the Royals were going to come downtown into downtown Kansas City. So I bought this one piece of property, and I'm like, this will be a good one because there's a chance they could go right over here, right? And well, then the vote happened. It didn't happen, all this shit. And I've had the place up for sale for on and off for about the last 4 or 5 years. So I'm supposed to close this week on the property. I dropped my price probably 30%, maybe 25%, to close, just because I'm like, I'm done jacking with this thing. It ain't going to happen. Who knows? And I said, you watch. As soon as I sell this or agree to drop this price, this is going to happen. Sure as hell, Todd. The Royals came out this last week and announced that it looks like for sure they're going to go over by Washington Park in downtown Kansas City. Yeah. And I just signed 2 days ago. I signed the contract with this guy to sell. So I told him, Sean, because this guy's an engineer. I said, he's probably an engineer with some of the Royals and knew for certain the thing was in, and I just got, I got double whammy. But again, it's just, all I need to do is hold out another week or two, and I probably would have clipped another $250,000 on the deal. Another $400,000. I don't know what it would have been, but hell, it could be way more than that. But if we sit and waited it out, but I don't know. I think I just get in a hurry with stuff. Like I said, I've gotten better as I've gotten older because I look back now and look at all the things I missed out on. But again, it's easier said than done, right? It's like a diet thing. I mean, you got to have discipline, man, discipline. And a lot of times that's what I lack, I guess, at times. And, it's something I'm aware of. And I need to focus, discipline, all those things are critically important. And I know a lot of folks that are a lot better at them than I am. That's for darn sure. So. But,
I know, but you're so far head and shoulders above most. I mean, it's just relative. I mean, when you teach a lot of these things, stuff, I keep always saying to you, Kevin, dude, you got to realize you're the top 1%, less than 1% of people just don't want to work that hard, don't want to be there. But you've done it. That's what's impressed me the most in my 10 years. Your consistency in your not only your trading and stuff, but just in your life views and stuff that you stood by them.
And you and I go back to when we were kids, so we both know. I mean, we were dummies, and it's like, to get to where we've both gotten, and there's been a lot of ups and downs, and a lot of wrong moves and wrong turns, but I think we've definitely tried to right that, and I know you're working on your pay. You're in and out of trades all the time. You're the same boat I'm in.
I'm changing. I haven't made a listen. You're getting through. I haven't made a move in a long time. I'm sitting tight, waiting for the thing. I probably should start buying back in though, shouldn't I? But we'll talk about that later. Hey, we got a perfect segue though, right here to some our perspective areas. When you just made the comment, we were going.
We're 2 hours into this thing.
Huh?
Yeah. No, and I said we're about an hour and a half into this thing.
Well, all right. We'll tell you what. I'm going to make a note. We're going to cover this next week. I agree. I just looked up, dude. It's been a great conversation, and it has time has gotten away from me. So we'll move. We'll save this for next.
No, yeah, go ahead. What was that?
Well, it was about your story. Well, so you're talking about making mistakes, and mistakes come in many forms for many reasons. But in yesterday's report, you had the story, a true eye opener. And things, when you first, what you saw your mom, how the dynamics at home, and what mom did, and her roles and that, and then you just assumed, that was where it was going to be when you got married, and then surprise, surprise, and stuff. But and so you just overcome it. Your point, your main thrust was overcoming deeply ingrained childhood beliefs or perspectives, and how difficult it can be. And it made me think about even other areas of life. I mean, that where you get these things. I mean, I came from customer service, started working for you, and really had no clue for years, what it meant to be a real salesperson. Still, no comments on your side. But the point is, you know what you know, man. It's what you did, and so when you start questioning that and changing, it's like, gosh, dang it, man, this is hard. Or
all of those things that you saw or observed as a child, I mean, those are all ingrained and become our building blocks for us as people. And so I was raised I lived with my grandparents the first part of my life. My dad was in Vietnam, and my grams, she did everything. I mean, everything around the house. I mean, she had breakfast ready in the mornings at 5 in the mornings, and she had all my pops' stuff laid out that he needed for work and that, and he'd go off to work, and and she'd start to do the laundries and make the beds and change everything around and I had a list of chores. Hell, even we'd vacuum and we'd dust and we'd do this and do that, and they just had a small little house and nothing big, but and then she'd get to the store and we'd start dinner and she'd be making dinner, and then she'd have dinner ready, table set and everything ready to roll basically when Pops came through the door. And and then my dad came back from Vietnam, and my mom basically did the same when with my dad. I saw that throughout my life, and we lived in a small rural community, and I most of my buddies' houses I went over to, I saw the same thing, and I honestly didn't know any different. And
right.
I just thought that's how things went down. And and as you get older, you're like, yeah, I think that things could be a little bit different on that front, and for sure, especially. I get married to Michelle, and she had a big-time job, and and we had to tag team it all at home, and there's just a lot. These things are different, but like you said, it's crazy the things that you don't even think that there's a difference in, right? But it's what you see. You don't even think about it, right? It's just what you saw your parents do, and you saw this person. It's no different from the kids that grow up in a family with abusive father, or you see the father beat the shit out of the mom. Well. And you wonder why that stays in the family tree. And, the kids have to deal with the alcoholic parents, or, the kids have to. My dad come home pretty hot, real hot, I should say, at times. And he's never an alcoholic or anything like that. He'd have his beer or two here and there. But, he'd come home hot, and I don't know if what he had from Vietnam going on or whatever he came on. But, yeah, we all have those things do it. But I think a lot of, how we develop through life are those building blocks of what we see, not necessarily what we read or teach ourselves that, but what we see and perceive to be real. So those are tough ones to overcome. Yeah.
And it just really boils down to, it's not about being right or you're having your way. It's about what's going to make life operate to the best extent, in a relationship, in a family, and stuff like that. So. I mean, once again, this is why I think part of why the Man Trump Report's been so successful is you've shared these things, wins, losses, failures, and I hear that all the time. Hey, man, not everybody shares their failures and stuff. So that's why I like to pass these things along, and we've heard the stories.
I tell everybody when I go out and see, I tell kids, the only reason I'm on stage versus somebody else, I just fail more times than a lot of it. I mean, that is it, right. Honestly. I've failed so many times, it's silly. So, I'm sure there'll be tons more that I fail at. So, but you just got to get yourself, dust yourself off, get back in there. Hey, I did want to talk. You told me some guys, some folks had written in. I want to make sure, too, the listeners here, write in any questions you have to Todd and myself. We'll cover them on podcast, try to explain them with a little more color. I think some folks had written in asking how to invest in that.
Yeah, thank you. I passed over that. I was going to Catch you later. So one of our subscribers, he wants to invest in the SpaceX pre-IPO, and just wonder if there's any recommendations from.
It's tough in that private space. I threw some money a year ago or 2 years ago, maybe, at Ron Barron's thing. Ron Barron, I've always liked Ron. Ron was super early in Tesla. Him and his family, minted money on their relationship with Musk and the whole Tesla thing. But they have their own fund and an ETF, Barron Partners Fund. I think they have about 33% of the assets are in SpaceX pre-IPO. They own it from other ancillary investments with Musk. ARK Venture Fund would be another way. I think they got about 17% of their assets in SpaceX. And then, a play that a lot of people don't look at is Alphabet. I think Google, or Alphabet's the stock, but Google owns about 7%. I think I got 7-8% stake in SpaceX. So, that's probably one reason Google share prices are where that. But there's another easy way to play it. I also, I'm not involved in this one. I know people that are. It's that Crane's Artificial Intelligence and Technology ETF. I believe the symbol is AGIX. The Ron Barron one is Ron B. He also has another mutual fund out there if you do some research on that. I like the Barron ones. At AGIX, like I said, I think they got 3 or 4% in Anthropic and about 3 or 4% of the SpaceX Class A shares that are in that particular ETF. Like I said, you have to do your own research and homework to look at it. But I tossed a little bit in Barron's fund. I don't know. How much is already priced in? How much is the hype overhyped? I don't know. I also always look up because Anthropic. I wanted to know, like, this was a few weeks ago, who really owns Anthropic, because they've been doing some big things. And from a company perspective, it's again Alphabet, which is Google, and Amazon. I think both companies. I think Amazon initially invested like $1.25 billion in Anthropic. Then they hit them with another $4 billion. I think Google probably is 1.5 to 2 billion invested in Anthropic. And then OpenAI, OpenAI, Todd, is going to be more Microsoft. I think Microsoft tossed $1 billion at OpenAI like back pre-COVID, and then hit them with another. I think they threw another $10 billion at them maybe in 23. And I know Amazon was an early investor with multiple billions, and NVIDIA's thrown money that way. So, if you think about that, so OpenAI and Anthropic, I mean, Alphabet's in there, Microsoft, so that's where I'm saying I just like buying some of these bigger tech names on the bigger brace, because they've been deploying capital in some good areas, good spaces, and, I think that's the play. So nothing fancy, certainly nothing fancy.
No, never is. No, appreciate the time, brother. I think we covered a lot of ground, good stuff today, and we'll look forward. I know, just give a heads up to everybody. We've had multiple folks read it. Hopefully, we're going to try and find a solid succession planning, someone to bring on and talk that. There's a lot of, I'm getting a lot of hits with that stuff. So other than that, we'll get trucking along. Anything else, my friend?
No, that's it, buddy. I appreciate it.
All right. Well, we'll catch up next week. Have a great rest of your day.
All right. Thanks. Bye.
See you.